I have known Dave personally for, I feel like it's been a good 10 years now. We've been working together. Originally, I met him at he was the district manager of H&R Block in this area. He's an old IBMer, and I consider Dave a close friend. An ex-IBMer, I guess both apply to Dave. So he joined the group in September 2012. He was actually one of the people on the waiting list, waiting to join the group because we had a property casualty person, and he waited him out and joined the group, and has been a great member, a chair of TRP, and I'm thankful that we met all those years ago, and we continue to be friends today. So Dave, take it away.
Okay. Thank you, Dan. Just to start off with just a little bit about myself, since some of you may not, we haven't had one-on-one yet or anything. Like Dan says, I worked for IBM for 31 years, and retired from IBM when they started talking about selling off me and my division, and I didn't want to work for a telephone company. And I was a programmer. And so I did that, and then I had been doing taxes in the evenings for several years, so I thought, I know taxes. And so I just went right into becoming a district manager for H&R Block, and I did that for about 12 years as a district manager. Then they downsized, so I found myself unemployed, and so my cousin said, Dave, you ought to go in insurance. You're the perfect type of person to do that. You know people, you like people, you take care of people, and you got a fairly good head on your shoulders. You know, I can't argue with all those facts, maybe a couple, but so that's what I did. I started working for a large corporation called Farmers Insurance, and I did that about 8 months, and I saw that I've got a lot of constraints. When I go out to talk to people about insurance, all I can talk about is farmers. That's all. And so I decided to become a broker, and I joined an organization that is nationwide for brokers. It's called SIAA, and so I currently work with them now, but I have my own agency and my own name, my own company. And I can talk to anywhere from 8 to 15 different insurance carriers to try to find a best fit for my clients, rather than trying to find, fit my clients into what farmers offer, period. So insurance is one of those things, like I said earlier, is it's one of those evils that you have to have. And, so people go forward with it. And what's the one thing that usually people look for in insurance?
Lowest rate.
Lowest rate, lowest cost. A lot of people do that. And so my job is to say that, okay, I'm going to find you the best rate for the adequate coverage that I feel that you need. So let's talk about that. Okay. Now, there are what we call preferred insurance carriers and non-preferred insurance carriers. The preferred insurance carriers offer some better rates because maybe you have good driving records, you've got a good financial history, that type of thing. You've been driving for a long time, you've owned a home, and so they give you better rates. The non-preferred, well, I'm 19 years old. Yeah, I've had a couple of accidents and a couple of tickets, and I lost my license there for about 6 months. The preferred companies don't want to insure that kind of risk, so they will go with we go with the non-preferred until we get some of that cleared up. Any idea how long your record follows you, your driving record?
7 years.
36 months.
Some companies will go 35 months, some go 60 months, okay, depending upon the severity of the record, okay. So, yeah, it takes a while to get that accident off that I had 2 years ago. I got another 3 years before that will be out of it. Okay. So what I was going to do is just talk about some of the coverages and explain to you, like an auto insurance. Okay. When we talk about, first thing they say is you have auto liability. Okay. Liability in case you or a driver of your vehicle has an accident and you cause an accident and that hurts someone in the other vehicles. And then they eventually sue you for lost wages, a number of things. And suits, I think I can ask the attorneys, there are a lot of suits out there today, right? And so liability, and this comes in either a split value or a single value. Okay. So let's say you had coverage of 100,000 / 300,000. Okay. What that means is that you are covered to, each person in that accident is covered up to $100,000, not to exceed $300,000 for the total accident. 100, 300. Now let's say you had a single liability of 300,000. That means that up to $300,000 for that accident, period. It could all go to one person. It could be between 3 people that were hurt or whatever. But once it hits the 300,000, it's done. You have to pay the rest. Okay. Minimum in the state of Colorado is $25,000, $50,000. Okay. Now that's not much insurance. Okay. Suits today are well over $25,000. If someone is hurt in an accident caused by you or a driver of your vehicle, it doesn't take long for that medical bill to go well above $25,000. Okay. So when is it good to have 25, 50? And my answer is, well, we try not to. Okay. But if there is someone who is just starting to drive, they don't have any money, they're not married, they don't have children, they don't have assets, to get them started so they can drive, maybe we could do this, and then bring it up in about 6 months to maybe 50,000, 100,000. Okay. Now, a person that has been driving for quite some time, they got kids in college, they got a lot of assets, they own a home, they own maybe an RV or a motorhome, retired, so they have a lot of stake they could lose in case of a suit. And at that time, you should be talking about 250,000, 500,000, or maybe even 500,000. Okay. So that's what we talk about as far as liability. Okay, and then there's property damage. Okay, the property damage is to pay for those other cars that were involved in the accident that you or someone drove your vehicle caused. Okay. The minimum in Colorado is $15,000. That's a used car, for replacement. That's not a new car. Certainly not one of these big RVs that's the majority of the vehicles that's driving on our streets today. So I usually say, about $100,000. Okay. Now, is that going to cover an accident where maybe it was an 18-wheeler or a bus or something like that you caused? No, it's not. Okay. Now, there's other things we can do, other coverages that can go above and beyond that, and that's called an umbrella. Okay. An umbrella is just another insurance coverage that covers your life, covers your auto, your homes, any kind of liability that may come your way after the others, the auto and the home have paid out, and there's still a balance, then a $1 million umbrella will cover that. Okay. And then we have the medical payments on the auto. Medical payments usually is $5,000. Basically, this covers the people in your vehicle. If you have the accident and you're at fault, and there's people in your vehicle that are hurt, It pays $5,000 per person, and there's no limit on that, okay? So, and that's normally what we use on that. And then, of course, in Colorado, you want to have the uninsured or the underinsured. And usually that follows along with what you have for liability. Okay? So that if someone that is uninsured, or maybe they've got that 25, 50, and they have an accident and hit you and cause severe injuries, and then you turn around and have all these expenses, then that uninsured motorist, underinsured motorist will then kick in.
I've heard that 20% of the drivers in Colorado are uninsured or underinsured.
Yeah. Now, yeah, Keith.
Just one, the other good thing is just from an attorney standpoint. With underinsured or uninsured, having the umbrella is cheap insurance for you. If somebody hits you with 25,000, you could have up to $1 million worth of coverage for either medical or personal injury, and it's relatively inexpensive for what it is.
It does cost 40% more though, when you include the uninsured or underinsured on the umbrella. It raises it up fairly dramatically.
Yeah.
Put that on there, but more than.
Yeah. An umbrella will usually cost a family anywhere from, depends on what toys you have and how much you own, $150 a year up to maybe $500 a year. It falls in there for that $1 million coverage.
I have my umbrella payment, it's like $190 a year. If I was sued for a dog that knocked over a neighbor, and they paid $75,000 out, so I'm recommending it.
So I'm going to take just a second or two now just to cover very quickly some things about the home. Okay, the first thing in the home is the dwelling, the replacement of the dwelling. Okay, now I have, we have tools out there that will go out and figure about what it will cost to replace your home in case it gets burned down or destroyed, okay? And then we'll come up with a figure. And let's say that figure is $300,000. Okay, and but I've had people tell me, well, my neighbor just sold theirs 2 houses down, and they sold it for $380,000. Well, we're talking about just the structure here for the dwelling. Land doesn't get destroyed. Well, when you sell a home, you're talking about the land, the house, the outbuildings, everything, unattached things. Where in the dwelling, we're just talking about the dwelling. Now, most of Colorado carriers say that you have to have at least 80% of the value that is covered. Most of them won't even go to 80, it's going to go to 90. Okay. The way I look at it, you need to be covered 100%. And then there's an additional thing that we can add on that is another additional 25%. So actually you have 125% of the value of your dwelling to replace it. And that would kick in when there is maybe a tornado hit or maybe multiple homes were damaged. So all these contractors come in and they say, this is gold. So they start upping their prices. Lumber increases. All these materials increase as well as the labor. This 25% would absorb all that. Then on the home, there's other coverages like other structures, which are defenses, anything that's not attached to the house. Your personal property, of everything to replace it with new stuff in your home. And if you think that, I don't have much, you do have a lot. If you had to go through and replace every piece of clothing, every piece of furniture with all new, it adds up. And then there's the additional living expenses. Let's say that you had a fire in the kitchen, and they said, this is going to take us about 4 weeks to get this back up, so you can't live here during that 4 weeks. Then the insurance will pay for you to find another place and to absorb those additional costs incurred because you have to live someplace besides home for a while. And then there's the personal liability. Most people have $300,000 liability. I usually suggest $500,000, $500,000. It's about $1 or more a month for 12 months to go from $300,000 to $500,000. And these are the type of things that I sit down and I talk to each of my clients about. Or have clients come to me, or potential clients, they just said, I've got Allstate, and I just don't understand what this is. Am I covered well enough? I'll sit down and I'll go through that. And then it's up to them to decide, okay, I'm fine, I understand it. Or they may say that, well, can you give me some quotes and see if I can compare it. So I could talk for hours and hours on insurance, but then I'd have all here closed and sleeping. So I'll just open up to any last minute questions.
We have, Dave has used his question time, so we will take one question if you have it, and then we're going to have to move on.
With the extreme property values going up in Colorado, is that going to affect people's homeowners insurance, and they need to up on insurance and reevaluate that?
When you have home insurance, of course, insurance rates continue to go up. There's a couple of reasons why. One is because of the value of the home is increased, so they increase the coverage point. Okay. Sometimes that's built in, sometimes it's not built in. Okay. But that's something that when it comes up for renewal, that I look at. Okay, and then I'll sit down with the client saying, your house has really gone up. The dwelling, to replace that dwelling's gone up. Plus, you've done a lot of things to it. And that's why I need to know when you finish up basement or you've done any additions and stuff like that, so we can get that covered.
Well, thank you very much, Dave. Great.